Hey there, very good afternoon, everyone. Charles here, Frgnt Daily Chart Analysis. What is the time? 25 minutes to 4 here in the afternoon in Milan. Good afternoon. So, DXY, we won't call it a pair, the index that I go on and on and on and on and on about in terms of gaining that confluence for your trade. If you cannot even get the confluence from the pair that you're particularly trading, at least if it is a cross pair in relation to US dollar bearishness or US dollar strength, i.e., what is the DXY doing? At the very least, I believe it should be in your scan. I believe it should be in your watch list as it is in mine to allow you to have the best opportunity to take what could be quite a nice trade. So, regardless of the outcome here, I believe that I have taken what I'll class as one of, I'll put it in the category of a great trade. Not even so much of the reasons behind the particular pair that I'm trading, but the confluence that I have now based on the fact that I am alongside higher time frame or at least intraday perspective, what will start from on the screen on the DXY. So the pair that I'm going to be comparing the DXY to, or giving the contrast to, is AUD USD, shorts that I am actively in at the moment, and shorts that are very much so dependent on the performance of the DXY now. If this area is not respected on the DXY, it's almost a dead certainty. If I cannot allow that, or if the DXY will not push bullish enough for me to at least get break even on AU, then I'll definitely be stopped out. Now, the first thing that I'll address is, well, does that bother me? Well, in terms of a humane point of view, of course it does. I don't like losing trades any more than anyone else hates losing trades, or however I can phrase that. The bottom line is losing trades is a pain in the ass, right? We can't get away from that. But the statistical point of view, i.e. trading, the balance of probabilities, I know at some point I will lose trades, and I make no secret about losing trades, but it's how you lose, right? It's how you learn, how you lose. Now, if I'm to lose this particular position, I need to be able to journal this and say valid reasons in which it was taken. So if I share some higher time frame analysis for you all, and we can really take a deeper dive into it, and we'll make this more of an educational video as opposing to me just going on a rant. So that weekly time frame, we know the previous weekly candle has closed bullish above that weekly 50 MA. So straight away, I am expecting that this current candle is also, my theory is that this current candle, once it retests perhaps the lows or intraday perspective, I'm expecting a rejection of that weekly 50 MA towards the upside. So that's issue number one. So when I bring that into my thought process, I already know that potentially that if I am looking for a reaction on the DXY, it could be quite soon that I am actually, a little bit too soon is how I see this. So knowing that the DXY could, of course, pull back somewhat before it then reaches for those highs again, there is more than likely so. There is a high likelihood of the current weekly candle looking to retest some EMAs underneath it, i.e. the 4-hour 50 EMA, the weekly, and even the daily. So I already know that. But nevertheless, it has aligned nicely on a pair that I was looking to trade, and we'll get to that in a moment. So first and foremost, my expectations of my position are not high, but they're high enough to suggest that I have taken what I've already described as, in my journal, a great trade based on what I'm going to say in a moment. So that's a weekly time frame. There's not really too much to talk about that. We've got the fact that a couple of weeks ago we've closed above an area, but the bottom line is we've made higher highs on the DXY. I'm expecting a higher low for then a higher high continuation. So the first thing I'll look to do is I can either establish that on the daily by looking at a high, potential higher low for now expecting a higher high continuation, or I can go to the 4-hour to have that even more concrete and understand that, well, here is the high that we've established. Price then made the higher low. We're now in the element of making a higher high. Then on intraday perspective, of course, we're expecting higher lows before a higher high as well. So then when I take us back to that 15-minute time frame, it's then down to me to come to the judgment or the conclusion that after this high now, here could be the higher low before a higher high continuation. But again, my expectations, because I've already recognized that the DXY could pull back even deeper before making that higher high, i.e. here is a very much so a valid 15-minute point of interest, supported by the fact the 4-hour 50 EMA is going to be right there supporting the trade towards the upside. I already know, based on the DXY, that any position short that I am looking to take now, I must have the expectation that I most certainly have reasons to lose that trade. So first and foremost, expectations as a trader. Understand reasons in which you can lose that. But the only mitigating thing I can do in my arsenal is manage my risk and understand that, okay, Charles, you definitely can lose this position here if I am going to take, let's say, for example, DXY long from now. Without confirmation that the DXY is looking to long now, I already know that I am in AU potentially a little bit too early, right? I get that, because if I was going to trade that, I would highlight an area in the market and I'd say, right, based on the DXY, I recognize we've come back into a valid 15-minute point of interest. I get that. It's a key structure point for me based on the fact that I'm determining the most recent highs come from this area, telling me that now this is a higher low area. Price has come back down to retest it. But again, using all my technical ability, I know once an area in the market is broken, proving that this 15-minute order block is very much so a valid 15-minute point of interest, breaking immediate structures and then pulling back, giving me a lower time frame break of structures, the cherry on top of the cake. Only then I will have the certainty, or not even the certainty, and more of an expectation that I have taken. In fact, let's downgrade the trade from great to good, and say that currently it's a good trade based on the DXY. But I know why it could be a great trade, but still have the expectation that even this position here can lose, because there is most certainly a better position to take along from, right? So that's that on the DXY. So at the moment, if the DXY pushes bullish from this area, then of course that's going to bring my AU shorts into play massively. Now, what I have to also do is understand, well, why have you taken a short position on the AU? So not only am I using the DXY as a high degree of confluence, I'm also looking at the crosspair that I'm trading to understand, should I be in this particular position? For example, I'm not short GU, and I didn't short GU because I wanted a break of structure before taking the short from an area of interest that hasn't really proven itself. However, looking at AU, I most certainly am in that short, and I'll explain reasons why now. So on that weekly time frame, we had that hold up. And we finally had that weekly candle close below that slight range that we had. Well, it's not really slight. I mean, we've had from January until March where price hadn't been, well, it had been doing a lot, but it's just been pushing bullish and then kind of hovering around in the area. You can see clear highs in the market and clear lows in the market. And we'll just accredit that to being a trading range. But as soon as we've had that bearish candle close in that weekly time frame, the first thing that I want to see is price look to pull back into a point of interest. I'll look to short it. Then if we superimpose that onto the daily time frame, we have much of the same, but a bit more of a clearer picture. We've had some hold up in the market, price has broken structure, and now we start to bring the EMAs into play as well. We've got the daily 50 EMA above price, so that's supporting my short. I've got the 4-hour 50 EMA currently above price, so that's shorting my intraday perspective shorts as well. But again, based on the DXY, I understand that actually, if the DXY is going to continue pushing bullish, then indeed AU is going to fall to the downside. However, if the DXY isn't ready to push bullish and the DXY, sorry, a bit of confusion, but if the DXY continues its bearish move to the downside, then all what AU is going to do is simply pull back deeper, giving me a better opportunity to take full potential of the short, which I am very much so aligned with shorts longer term. But just because my longer term vision on the DXY, for example, is towards the upside and my longer term vision on AU is coming to the downside, it doesn't mean on intraday perspectives that I am ready for, or that trade is particularly ready to move now. On a higher time frame, for sure, if I want to trade with a 100 pip stop loss on AU, then absolutely I probably won't be stopped out. All I would do is have my stop loss probably above that daily order block and look to take a 1 to 3 down at these lows and just have to hold it for potentially a couple of weeks. That's fine, right? So on that 4 hour time frame, we can see much of the same. However, we can see the impacts and how price is really moving. Price isn't really providing us, based on that 4 hour time frame, much of a pullback. We're just kind of sliding down and gently making lower lows and lower highs on that 15-minute time frame. So for me, I now know that once price comes into that 15-minute point of interest, I need to be quite aggressive when getting in. But how aggressive? Well, as aggressive as the DXY is going to allow me to do so. So the fact that the DXY in comparison is now in a point of interest where I'm really expecting, or having no expectation, but technical analysis will showcase to me that the DXY has every opportunity to at least push slightly above or slightly from this area. That's given me the confirmation that, okay, there's the green light to take the short on AU. Now on AU, we had what I would perceive as quite a nice basic intraday trend on that lower time frame. However, price came in Asia and off price went. So therefore, I wasn't able to reuse this point of interest. And then we selected the order block above the area. And what's nice to see is, as far as we start to move up, it is the only valid order block available based on the 15-minute time frame that I am able to use until we get up to this area, which would be my more so higher time frame directional type of position. So I get that already. So again, there is still very much so reason to lose here on AU. But again, as we make that contrast between the DXY, and it's a great example, because if the DXY isn't ready here, that just means to me that AU is also not ready here, and that potentially then AU may well find some liquidity on its way back up, but I would really have to be sitting on my hands and waiting for AU to come up to this more valid point of interest up at the high, supported by the 4 hour order block as well, just here, that we're also refined within the daily, supported by all the EMAs heavily at that area before looking for the continuation shorts. So really this video is just about how you're able to use the DXY as Confluence to take a position, still having the expectation that there is, of course, always valid reasons for a trade to lose, but it doesn't make you, and I think it's very good to emphasize this now, it doesn't make you a bad trader if what you determine as a good or a great setup, even if it loses, because there is always a reason to lose. But that's the balance of probabilities, and we've chosen this method to start making money with, right? So it's about using what you have, using your technical analysis to your advantage. And most certainly, if you are able to take one thing away from this video, just start to bring the DXY into your scan. If you are trading the cross pairs, i.e. AU, GU, and EU, and even US dollar CAD to an extent, which has a great red flag at the moment, but simply because, again, I don't really see why I should be shorting US dollar CAD. I would like to long US dollar CAD, but I can't see any place at the moment to take a long from. So therefore, what can I do in order to get the benefit of that US dollar strength that I can certainly see across all time frames on the DXY? Well, let's go to a cross pair and see if we can benefit from that US dollar strength, and hopefully then US dollar is going to continue to slide the Aussie dollar to the downside. So if you can't jump on a cross pair as a primary, i.e. US dollar longs, UJ longs, perhaps flip it to the upside or the opposite direction and take benefit of the strength but trade the cross pair. But in order to do so, you definitely, in my opinion, and again, this is certainly not financial advice, just use the DXY as a bit of confirmation, as well as looking to establish on the pair that you're trading reasons in which you should be looking for a position in the first place. So then, just to tie this up, looking at that 15-minute time frame, again, if we are to establish the most basic type of patterns on here and trend analysis, the most recent low, depending on how you're viewing it, is coming from in and around this area. However, there are no 15-minute order blocks available. And what we can see here on Aussie dollar is that price was reacting, but it reacted quickly. So 15-minute order block that broke structure here. Price came back in. Of course, we didn't have the break of structure in the immediacy, but there was a bearish engulfing candle, something that I talk about a lot. We broke structure, and then price came back into this. So this was a break of structure on the lower time frame. Price come back in, tapped into that 15-minute order block, off it went. And we can start to repeat that process across the charts. Bearish engulfing candle here. Here we had that order block. Price failed to close above, and off it went. So again, I'm using history to help me. 15-minute bearish engulfing candle, 15-minute order block left behind. Price comes in. I'm expecting at least a reaction from that. Again, expectations, have to hold them accountable at some stage, but there is always an expectation that we expect price to move in our direction. But again, look how this candle is moving, and my blood pressure or my heart rate isn't changing, because I understand that this is trading, and I have every reason to potentially lose this trade based on how the DXY wants to move. If we start to continue that process along, 15-minute bearish candle, where we're looking here now, price came in, we had the reaction. So again, here, as long as I get my confirmation, which I had on the lower time frames, I'm definitely looking to take that trade and use the DXY as well. Does it make sense? Of course it does. So that's the crux of that video there, team, and I'll wrap it up before, well, hopefully before I get stopped out, but definitely before the video gets cut off. As my video this morning, I wasn't quick enough. But yeah, I hope you're able to gain some light from that and use it to your own advantage in your trading. If you are certainly trading those cross pairs, just have a look at the DXY. Mark the DXY up just as you would trade it any other pair. It's an index that I have traded before, and potentially it's something that I might go back to, because reading it's just like any other trading pair. So thank you very much for listening, everyone. I appreciate your time. As always, that's 17 minutes and 10 seconds of your life potentially wasted, but I hope it won't be. Thanks for your support across all the channels. All the very best, and you will certainly hear from me again soon. Take care, and I'll update you on this trade. Charles.